Hello, this is Martin from Seagate, channel for learning about trading and investing. Welcome to the daily market analysis show. We will look at what happened in the market today and how we can plan for a good trade tomorrow. If you're not subscribed, please subscribe and share to your friends so that everyone benefits. It helps us also. Thank you. So the markets yet another all-time high, but ended up bearish. Bull trap taking the gap support, right? This is what happened. We are going to analyze it for October 20th, Wednesday 2021. So as usual, we'll be looking at all of these parameters that is listed here, right? That's part of the pre-market analysis. Candlestick patterns, price action, Bollinger Bands, suppose means momentum, divergence, trend, all of this. And in addition to that, we analyze the open interest data. We look at the institutional participation, sectorial performance, and global commodities, and then wrap up with some actionables. Okay. So without wasting time, let's get into the action. So, the first and the foremost, the candlesticks in the price pattern. So, Nifty, what did it do? It did a fourth gap up today morning, but at the same time, it made a new all-time high. Something above 18,603 or something, right? New all-time high, but it ended up with a bull trap. Bull trap is when you close below, when you gap up and then close below the high of the previous candle. So, a bull trap and bearish candle, and the bearish candle is engulfing. This engulfing means it's fully inside. The previous spinning top candle is fully inside the second one, completely engulfing on the BANKNIFTY on the right side also. So that's what happened, and it has taken the support of the previous gap. Right, there is a gap here. There is a gap here of the BANKNIFTY and the Nifty also. Now intraday price action, if you see, it just gapped up just like a straight, gapped up and then went flat. Today also gapped up and then went with inverted V's of two inverted V's, one inverted V and second inverted V. BANKNIFTY right now exactly the same pattern. It gapped up, inverted V and another inverted V. This is exactly what happened. Now both indices were attempting to work on the Bollinger Band upper band, but we don't know whether it's sustained. If it's going to sustain this bearish downward, then it may continue on the bandwidth. Otherwise, it will fall back to the 20 moving medium average where it is. It's quite far away if you look at, right? So that's about the volatility expansion that had happened, which is far away from the 20 moving average. So this is what we are talking about. Nifty on the left side and BANKNIFTY on the right side. Intraday price action 15 minutes, kind of flat up to the gap up, just like yesterday. Support resistance levels, you look at this. Resistance is upside is 18,615 and then we have 18,950. That's Fibonacci projections. So it is at a support of 18,350, 450, that band, right, which is also a 38% of Fibonacci extension. Fibonacci extension 23 is also giving multiple gap supports near to that, right? One is at 18,000, then 18,200, 250, then the one where it took support today. So there are multiple gap supports today. It had bounced from this gap support and also a Fibonacci extension. This is what the support and resistance is. On the right side, if you can see the resistance upside is 40,000 where it hit today, and then could not found resistance there and then went down. Resistance upside above that is 4900. And the supports below is a gap support at 39,600, 400. 39,400 is where it bounced today. Bounced up, just like Nifty. BANKNIFTY also bounced up. And below that you have 38,800, then 38,350, and then 38,000 kind of. These are all supports below. Right? These are all Fibonacci extension and Fibonacci retracements, previous swing lows, previous resistance areas. That's how we have done all this. So the support and resistance for the Nifty and the BANKNIFTY is clear. Momentum divergence remains the same. So its momentum is bullish, intact. If you see on the right side, top, this is Nifty and this is BANKNIFTY. Both have clearly momentum is on the bullish ones. Weekly there is a divergence which is bearish on the Nifty only. That remains there. And that is working also. It's kind of confirmed because that pulled the market down, you can say. Okay. Now the trend, it is DMI positive is already in the bullish zones. DMI positive, bullish, trend is rising up. Trend is rising up, taking a U-turn and rising up. There is extreme bullishness, but today you can see a bend on the DMI positive on both indexes. But momentum intact in bull zones, and trend ADX indicator also showing good strength rising up, and it is intact. VIX kind of flat, it slightly moved up 1%, but previous day it had jumped up nearly 9% after the initial 17% of dip that happened a few weeks back. So momentum is trying to hover between the 16 to upside, so up to 19 or 20. So that range formation is what is happening. And implied volatility is 17.2 levels, and implied volatility percentile is 40.32, and it's gradually going up in favor of the option sellers. Optimus Analysis, you can see in the left side Nifty and right side the Bank Nifty. Nifty 18300 is support, then you have 17600 highest put rating for the expiry of 21st Thursday, weekly expiry, and then resistance for the Nifty is in at 19,000, and then we have a lot of call rating that can be seen at 8600 also. Brokerage is reduced slightly, but still near to the rule zones, 0.91, and features are the short builder. Bank Nifty right side, you can see that the highest resistance at 38,000, put rating highest after that is at 39,500, but look at the resistance, it's at 40,000. 40,000 is going to be a psychological number, and any close above that would be a big up move, right? Because second resistance is at 41,000, but put call ratio is reducing, it's not bullish, it's 0.77, it's a short build up that happened on the Bank Nifty also. That's the open interest analysis. So the supports, right? So the support, so overall if you look at the chart, you can see that there is more resistance, it's slightly bearish, but you can see that the supports are there at 18,300. If that is broken, then it can go to 18,000, right? So that's the open interest analysis. Now let us see the sectorial performance. IT, so basically it moved up after a very good correction that happened previous weeks, and now it's 2.2% of up move that happened, right? So whatever move happened was in IT only today probably. The momentum is in the bull zones, and it's time to pick the stock. Pick the stocks if it sustains, right? There are good stocks, like Infosys and Emphasis, both are doing good. Wipro has made some correction, time to enter the next step. So IT is doing good. Metal went down 2.5%. Momentum still in the bull zones. You probably can pick, but you have to be with tight stops. Auto also consolidated 0.15 after initial breakout from the W pattern, double bottom, but it's in the bull zones from the momentum perspective, so you can. And there is a bullish reverse momentum that is also unconfirmed, which can be in favor, right? So auto can go, it's bullish. Metal also is bullish. IT is bullish. Now pharma is slipped 1.4% down, and it's consolidating in its sideways momentum, so stay away from that. FMCG closed red with 3% down today. We lost the momentum on the daily, so we'll have to wait first for the momentum to catch up, but there is reverse bullish resistance, multiple, unconfirmed. If that works out on the weekly, that works out, that will be the time when it bounce back, but it is lost in the daily momentum, so stay away from it for now. Reality is still at support of the resistance, support of the momentum, RSI 60 support, and but today it had a nearly 5% of fall. That is the biggest fall, right? After the outbreak from the cup and handle weekly. So stay cautious. If momentum is lost in the daily, don't enter that. Right? That's time to exit. Right? If these are short swing trades, positional, you can look at support levels in the charts and fill magic tracing levels and all that. But on the stock side, so reality is bullish, but you have to be cautious. Right? Whether that divergence that is seen on the weekly is going to make a bounce up is all that you say. But otherwise, you know, on a medium term, if you look, medium and long term, if you look, it is bullish. Short term, it is at support, very good support, where there is a potential to bounce up. If it does not happen, then stay away from it. But as of now, real is bullish, auto is bullish, metal is bullish, right is bullish. Pharma and FMCG, stay away right now. Others also cautious. As long as momentum is intact, fine. Institutional participation data has not come in. We'll just quickly check if the institutional data has come. No, it is not. So we'll go back and get on with this stuff, right? But if you look at the, there is small amount cautious buying happening, and FIs are continuously selling. So 7 days is what you said. DIS For institutions, small buying has happened last 3 days. Today also they might have sold good, so that is not good. Like both, no. So if both the institutional participants major are selling, which may not be good. Right. Let's hope that there is only a 1 or 2 days thing. But yeah. So going ahead, we have the dollar. Right side you have the dollar index, which is broken out of one resistance. Tried attempted to break that resistance, but fallen back. So it's a red. USD INR currency pair also is at a major resistance zone. Try to break out of the channel. Try to break out of the resistance above that. Not dipped and then consolidating and hovering around that 75 level. So anything beyond 75.5 maybe only because if there is a big move. But momentum wise, if you see, you can see some kind of divergences. It can take the RSI support and then bounce. So 75.5 maybe the place, you have to look on the upside. Downside you have support at 74.3. So this risk is on the upside only, right, for those. So let's use the INR currency pair. And then crude oil is heading like crazy, still at the 82 levels. Today we had a green close, but at least it's not going above 83. And gold, if you see that it had dipped and then it had again bounced up, and it is trying to hold on to that support zone. It is not ready to fall down because it bounced probably because dollar weakened slightly to the dollar index. So as of now, everything is flat. The Dow Jones is kind of flat and slightly bearish. Nasdaq is flat, small green seen there, and small green seen in the S&P 500, and the UK markets also slightly flat. So no major moves of big moves are seen here. Excuse me. So let's look at the pre-market tomorrow morning, if how the global markets performed before we take a look from that. If big moves, big bearishness or big bullishness is seen in the European and the global US markets basically, then there could be indications that it same can impact. There's no guarantee that it will impact, but very likely that it will impact our markets also. So as of now, there is no big move seen, but take a look at that next morning. Action levels remain the same. IT, both the IT stocks, Emphasis and Infosys. Infosys was there in the yesterday's peak also. We did well today, and the volumes are great. The momentum is great. Trend is up, and candlestick also shows some kind of breakout from a rounding pattern on the daily candle. Same is happening with the rounding pattern. Breakout has happened today and is formed a open is low bullish pattern. Momentum is good. Volume is great and trend is also good enough. So to Emphasis and Infosys. Yeah, so that's about the action. So wrap up. The short-term view for me is mildly bearish, because the reasons why it's bearish is because the candles are showing bearishness, engulfing big long white range candle, bull trap, and a previous spinning top completely engulfed in that bearish reverse divergence on the momentum. So these are the reasons why there is a mild bearishness. Profit booking can come another reason at the all-time high levels. This is like 18,600 level is too high in too short period. So profit booking can come. Market has room for corrections. Right? So these are the reasons why I am mildly bearish. Why mildly? Why not strongly bearish? That is because there is still good momentum, still good trend. Right? 3 times bullish kicker, extreme gap ups, extreme bullish gap ups. Every dip is getting bought, and the gap supports plenty at the downside also. To the 18,000, it is 18,000 seems to be very good support as of now. So good supports below, trending good trend momentum, everything is in favor. Fyers had bought yesterday. No, there is some worry of that today. That is not available, but if Fyers are sold today, that is adds to the reason for the bearishness. Most likely they might have sold it today, but at least not selling big. All the DAs have been selling continuously, right? So these are the reasons why my bearishness view. Your view may differ. You can take ideas from it and inform your own market view and the trades and plan accordingly. But quarterly earnings are still getting outside. Next couple, next 2 weeks also this will be coming, so that can cheer up the market, and then markets can get bought once again, right? Even if it corrects a little bit, it may not be big enough, less than 5%, and then it can bounce back. All of this can happen, right? So that's another thing. Then volatility cool off had happened to, and it has formed some kind of base near the 15.8 kind of levels, and now it's bouncing upwards towards the end. So there is a Vega boost to advantage that can be in favor for the option series. Good premiums are there now compared to previous levels, and then IVP also is increasing, so that should work. So calendar spreads could work because of the profit booking thing, that just like how it happened today. There could be big, spike choppy moves that can trouble intraday, long naked buyers, if they are at risk. So go for spreads, calendar spreads, calls, pool call spreads, or JT stats, and all these kind of strategies, so that in case of reverse fall, also you don't lose too much, right? So that's a wrap up. I hope this helps you to frame your own market view and your own ideas and trade plan. If it helped you and if you like it, hit the like button and then share it with your friends so that they can also benefit. Thank you for watching it. Happy tuning and happy learning. Bye.